And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning. Happy Friday, everyone. Welcome to the Market Forecast. It's already October 1st. Hard to believe. Thanks for trusting me with your time. My name is John Hoagland. As always, we're going to be looking for context, risk management, and infinite patience. Economic numbers already out this morning, 7:30. The personal income and outlays out. PCE already out, 9 o'clock. We're looking for the ISM Manufacturing Index, construction spending, and the Michigan Consumer Sentiment due out, and all at 9 o'clock Central this morning. So we'll be keeping an eye on those as well. As far as the news is concerned, the U.S. government has gotten its funding at least until December, but the House, I guess, has postponed infrastructure bill again as the political arm bending continues in Washington, D.C. U.S. stocks have tried to recover from some pretty deep overnight losses. Still some day to do. Interesting things on the charts this morning. We're going to take a look at those. Crude prices seem to have stabilized on hopes that OPEC Plus, when they meet next week, will agree to adding more supply to the marketplace. As always, make sure you hit the lucky like button, share, comment, question, feedback, and heckling are always welcome. Subscribe to our YouTube channel so you can go get notification when we do go live. And taking a look at the VIX this morning, it's down slightly at 22.74. Dollar index also off a little bit this morning at 94.04. These are off the settlement prices from last night. And the 10-year yield holding relatively steady, just under 1.5 at 1.48%. As always, got to say good morning to my people. Harry, you're the first one in the room. You win the prize this morning. Theo, good morning. Eddie, Brian, Bill, Frederico, Adrian, Steve, James, Zurain, Cam, Jim, Kate, Chris, Harry, good morning. Chris, Laura, good morning. NM, trying to keep your idea of keeping smaller risk, but it seems I need infinite patience to get the right entry. And that is true. It is true. If you are going to be demanding good trade location, you're going to have to be patient. You're going to have to let that market come to you. Had best day yesterday after using your low risk approach. I'm glad to hear that. Probably a fluke, but hey, who knows? It's in the books now. It's not a fluke. Good morning, Keith, Daco, however, I'm sometimes not that good pronouncing names. I'm going to go with Daco. Jason, Don K, UG, good morning. And Michael, good morning. It's good to see everybody. Yeah, I'm here. I'm actually not here today, but the markets are in such a position that I find myself compelled to sit down and take a look at them. I'm happy to be here with you this morning. I was going to have Dan do the forecast, but I felt like I really wanted to just take a good look at these markets this morning, so I'm happy to be here with you. All right. Let's jump in to the charts. You're welcome, UG. Let's jump in and see what we are seeing. As usual, I like to get started here with the daily in crude. Let's get the daily in crude up here. All right, so, hey, that's not going to help anybody. Let's take a look. So we're going to make this a lot bigger. Obviously, we've been moving higher over time. We've had an assumed head and shoulders that we've recently reached its Profit target looks like almost nearly to the tick. We've got weekly kickoff high up here at 76.90. We took a look at it earlier this week, and since then, we've fallen into range. The market is looking for new information. We had a boost in crude stocks this week, first in quite some time, and we're looking to see what happens with OPEC next week. So obviously, 1, 2, 3, 4, 5, we're basically range bound. We've had some pretty good probes outside of the range, but here we are right back in the middle of it. So, James, yeah, I'm good. I was going to mention that. Hopefully, you did get the opportunity to see to see Michael and Dan yesterday afternoon. All right, back to the charts. So the long shadows and short candle bodies indicate this indecision here. Very little change in open interest yesterday, losing only 600, but on some pretty decent higher volume. That probe to the downside brought in some participation at the very least. So strong volume on no direction, open interest largely moot. We're in short time frame control here, ladies and gentlemen. I'm going to be looking towards short time frame levels for my opportunities. So we took out 3 visuals yesterday. Naked point of control here, naked point of control here, and a little bit of a gap. We opened, we took care of this one, we took care of this one, we took care of the gap. We returned back to where we have been range bound. We just opened up. We're in range and value, and the thing that sticks out to me in this chart, and particularly on these profiles, is the fact that we are opening between 2 high volume nodes and in a low volume area. This says to me that there's a pretty good probability that we're going to check down to this high volume node and to this high volume node to finish up any business needs to be done in this area. Obviously, the market is holding some overnight shorts perhaps, but I'm not looking at that as a major factor in my opportunities. I'm going to be patient today because we are in range and inside of value, and the fact that we are not at either of our high volume nodes, I'm going to wait. I'm going to stay cool, calm, collected, and chill out a little bit. All right? So no rush into anything here necessarily in crude oil. Now, this is where things get interesting. We have our first down month in the S&Ps since January of 21. The downside structure is being supported by volume, as it usually is. The market usually brings in volume on the downside. Open interest, not so much. We lost 13,000 in open interest yesterday on a pretty decent move away from weekly kickoff level, which was supportive, magnetic, and repellent. We didn't bring in a whole lot of new open interest. What's that mean? It means that are we still liquidating longs? It's very well what that could mean. The monthly chart, we're not going to put it up here right now, but there's a bearish engulfing pattern from August to September. You can kind of see it here. So, here's our August low, and our August high is somewhere right up here. So we opened, we traded higher, and we finished below the low of August. So that creates on the monthly chart a bearish engulfing pattern on a long time frame. So that's a little bit ominous. We could have probably suspected this when we put in the island top at our all-time high. So the island top, pretty good information. Now we're looking at a monthly chart that has a bearish engulfing pattern. We've broken upside structure. What happens next? Nobody knows. I've seen this situation before where it looks like there is nothing but doom and gloom for the equities, and I've seen them just pull themselves out of it and continue the march to the upside. What does that mean for us today? Well, there is an interesting situation, and this, bears a lot to suspect or. So yesterday, I'm just going to go over what the late spike is. All right, so the market moved lower for the better part of yesterday. It closed on its patoot, if you will, and didn't have time necessarily to show acceptance or rejection of this late spike here. This last push down below and closing below the previous day puts in that late spike. Now, the bar right after that, it kind of settled there, and we kind of moved back up towards the base of this late spike, which, by the way, the base of this late spike, to be precise, is 43.0450, and then the bottom of the late spike is, of course, the low of that last bar in the regular trading hour session that takes it down to 42.94. So what we're looking for is the market going to open in or below the late spike, or is it going to open above the late spike? It's not, we're not sure what's going on here just yet. But if we do open above that 43.0450 level, that would indicate that there is a rejection of price at lower pricing. If we were to open in or below the late spike, that would indicate an acceptance of price below value. Anything is bound to happen here. We've got 20 minutes left before the open, 18 minutes, let's say. So we're going to have to keep an eye on things. The settlement price is 42.9750, losing 13,000 in open interest yesterday. Not a lot of new selling coming into the market down here, which is encouraging. We're going to probably be opening in range and in value, so I'm going to try and stay patient. This late spike here between value low from yesterday, settlement, the low from yesterday, the low from last week. This, my friends, is a high target area. It's a level it's an area that I'll be looking at. I can't say any direction here just yet, but this is an important area in trade today. If we never get into the late spike, that's going to continue to mark acceptance of higher pricing through time. Maybe we'll continue to move to the upside. If we get back or open in or below the late spike, that may mark acceptance of lower pricing, and we may see price continuing to push to the downside. We've got lots of weak structure and visuals down below this market because of we've been rallying for better part of a year and a half. Not now. So with no overnight inventory and no gap, my focus is going to be on this late spike. Whether we accept inside it or below it, or whether we reject it, we go the other direction. And to the Nasdaq now. When I saw the close yesterday, I said, I can't just walk away. I gotta see what happens tomorrow. That's the thing about these markets is you're gonna take a little bit of time, and then something happens, and you're like, I can't miss it. My dad missed a lot of family vacations because he didn't want to miss anything in the markets. Nasdaq volume maintains. We had an increase in open interest in the Nasdaq, 1,600 contracts. Downside auction seems healthy for now. We have to be aware of profit taking. When we look at where we started the week all the way up here. We've been moving lower all week long. Beware of the profit taking face rip and rally that does sometimes happen. Even in a down move, the opposite moves can be vicious. Take a look at the 30. So it's again subjective. If this is indeed a late spike, the market recovered after the close and kind of came back up into range. Here's the late spike for the Nasdaq. Looks like we're going to be opening above it. This again is a target-rich environment for us down here. Our value high is up here. That's our overnight high. Are we going to show acceptance of value from yesterday? Are we going to show acceptance in the late spike or lower? So the overnight low, this late spike is really going to be my focus this morning for opportunities in the equities. Gold. Boy, we got that ripper up in the gold yesterday, didn't we? So we had a targeted level that we reached 2 days ago. We tested it last night or night before last, and we had a pretty decent move off that low. But we lost open interest, 2,900 in open interest. We're still holding medium time frame downside structure here. You can see that this 20 session exponential moving average has been respected for a couple of weeks now. Are we going to get another shot at it here? I would be interested in seeing that. Good morning, my brother. Good to see you this morning. So the downside structure still remains. That 20 session exponential moving average is something we'll be keeping an eye on, this red line right here, and to the 30-minute chart. So here's our testing of that weekly kickoff level. Boy, it really makes me happy when opportunities come this quickly and this strong away from my weekly kickoff levels. We've got a decent move to the upside, and following suit, the big move ends up just waffling for the rest of the session. Just nothing left to do. If you caught that move and you got out, the best thing you could have done yesterday is gone to play golf or something. We're still just kind of hanging around here. We've got this naked point of control here, which we did check yesterday. I'm going to take that and end it here. Where are we? We're at settlement. We're in range. We're in value. Try and stay patient. I believe that the opening range does remain at the low of the session today, but after yesterday's move to the upside, I didn't really feel like it was a dependable opportunity, because here we are. We're in range. We're in value. We're at settlement right now. There's no overnight inventory, no gap, no runs, no hits, no errors, and nobody left. Patience today. All right. To the euro. We get the VIX, the dollar index, 94.04, 94.50 is the all-time, well, this year's high. So it's come off of it just a little bit and seems to be just finding some area of balance with which to remain. We had open interest higher yesterday, 4,800 contracts to be expected. The downside move is building volume. It is building open interest. There's no reason to think that it can't continue other than the fact that we've gone a long way to the downside. Are we going to see some profit taking from some of the shorts that have accumulated this week? It's entirely possible. So beware of the opposite face ripper move. Can happen anytime. Don't want to scare you, but just be aware of it. Make sure you protect yourself. Always wear a stop. All right, the 30-minute gap rules. We just did just now. You come down here, close the gap, but no acceptance inside value and range from yesterday. Still looking like a possible upside opportunity, as we do have a lot more visuals above with which to go and recheck than down below. Now, there was a question the other day about what it means when we go and test a level or check a level. Markets are extremely visual. We see that the market comes back and rechecks unfinished points of control. Those unfinished points of control are comfort levels. They're levels where a lot of people were comfortable transacting business. So they do become magnets. The weekly kickoff levels are, longer term levels. And when the market goes and tests them, it's looking for information. It's looking to see if there's business to do, if it's going to attract more business, because as we know, the market's job is to find that equilibrium where buyers and sellers can meet and exchange freely. Two-sided is balance. Two-sided auction is balance. One-sided auction is trend. The market trends to levels where it's going to look for opportunities. If it finds business to do there, it's going to hang there for a little while. If it doesn't, you're going to see a pretty quick rejection, as we did yesterday in gold. So today in the Euro gap rules, we tested it. A lot of visuals upstairs. Point of control, gap, point of control here, another point of control up here. There's lots to be looking at above. So if we can't re-accept inside value from yesterday, I'm going to try and look for opportunities to the upside. A lot of that is contingent, of course, on the dollar right now, as it is holding near weekly highs or yearly high. Rates have stabilized a little bit here. This is the 10-year. Rates have stabilized a little bit. The market has come off its recent low. We are still looking at a potential profit target from this breakout all the way down to here, which takes us down to this swing low. Nice lineup of visuals there. But the market has really kind of fallen into balance here. Pretty decent open interest boost yesterday, 35,000 off the low. Some buyers coming in to see if maybe our low is in for a little bit. Take a look at the 30-minute chart. There it is. So, what happened? Oh, okay. So settlement is all the way down here. It's 131 and 19 and a half, 30 seconds. We're opening with a gap. We've got some overnight inventory to the upside here. We are basically now kind of covering this small gap that's going to come off the chart. Have we traded to this point of control in regular trading hours? I'm going to go with no. So that's going to remain. So we've got visuals on both sides of the market. We've opened out of range and out of value. So if we can't close this gap relatively early, it means we're gonna probably look for opportunities in the direction of the gap, which would have us looking to the upside, which would have rates falling off a little bit. Not sure if anything like that is going to be happening today. Let's take a look now at the natural gas. There it is. All right. We're well aware of what's going on. We've had some pretty ballistic moves to the upside. The market is falling into a pretty wide area of balance here. That's going to offer shorter time frame opportunities using shorter time frame levels. The market is currently sitting right on weekly kickoff high. We added 8,600 in open interest on this push to the upside. Lower volume. Not that impressive with the volume, though. The market really just kind of starting to rotate here, looking for new information. 30-minute chart. Okay, we've had overnight inventory to the long side, overnight inventory to the short side, but the market really falling back into range and value from yesterday. That's going to tell me patience. Inside the value area, look for opportunities as the day goes on. There's not a big change in the perception of value of natural gas since the beginning of the week. We're still hanging around here. So try and stay patient. And while we are in this area, it's more likely to be short time frame controlled. So look for levels that short time frame traders could lean on to limit risk. All right? Okay, we are, I think, ready to go. And I'm looking forward to seeing what the markets offer us this morning. particularly in the equities. I'm looking forward to seeing if there's some decent opportunity there. Hopefully, these levels that we've discussed today will give you some areas to limit risk and to find some decent opportunities. It's been a very busy week in the markets as well as at Top Step. We had lots and lots of live events, and this is the last one for the week. Very happy to be here with you. Looking forward to a restful weekend. And all of you, do something nice this weekend for yourselves as well as for somebody else. Always say a prayer for world peace. Take our deep breath. Be grateful and creative today. Always wear a stop. And I'll see you Monday morning at 8 o'clock for the market forecast. Until then, be kind to yourself. Be kind to others. Have a great weekend. Be ready for next week. Another chapter in this year's book of trading. So get out there and profit today. Trade well, and I'll see you in the pit.